Hello and welcome to another update video on gold. Yeah, it's time to talk gold again. Gold continues to be in a broader range. Price action still looks corrective in both directions. So we continue to be ranging. I want to tell you about the different structures I am tracking here right now. Shouldn't be a surprise, but I have added one scenario that I really like, which is the orange one, which is the triangle pattern. Which explains if some of you, or why some of you might get frustrated by this price action, because we're only ranging. So with a structure like that we're dealing with here, hold on. With an overall bullish outlook, yeah, but short-term downside potential, but also upside potential, but an overall bullish outlook, right? It doesn't really normally make sense to trade short on the aggressive side, in my opinion. But it can make sense to use long trade setups when they present themselves. Apologies. So we had recently a 1-2 setup to the upside here. Price bounced. I'm going to zoom in a minute. Take a look at it. This was an interesting one because in both scenarios, white and green, the price was expected to go a little bit higher after reacting to our support zone. But the structure still doesn't really align with this white scenario. So remember, the white scenario is indicating this move down could be an A wave, this move up could be a B wave, and we're now moving down in a C wave in 5 waves. 1, 2, 3, 4, 5. In a scenario like this, yeah, the price could easily come down in a C wave in 5 waves, but needs to hold below the 3,475 level because that's the invalidation point. And in a scenario like that, we would normally like to see clearly corrective price action in a wave 2 bounce, which I've labeled as ABC structure, but it just doesn't look really like an ABC. We'll talk about that. But yeah, that would be the short-term bearish count. In this scenario, the market is currently moving up in wave 2 in the white scenario. It's a corrective rally after the price bottomed potentially in June in a wave 1. And we're approaching key resistance here at 3,425. A break above will already shift probabilities towards the other scenarios, yeah, specifically the green scenario, but really to clearly favor the green scenario, which is the bullish breakout pattern, we really need a break above this June high, the 15th of June high, and that is located at $3,475. So that should tell you the difference between white and green. The green scenario allows for a much more direct breakout to the upside. Hold on, let me shift all of that to the upside here. By the way, all scenarios are bullish overall. It's just that in the white count, we can watch for a deeper pullback before going higher, which again, you need to think about what that means for you strategically. I mean, it can mean if you're holding long-term positions, it might make sense to not even touch them, but then accumulate if the price goes lower. Not trade short because the overall uptrend is still alive, so you're trading against the higher level trend, right? Yeah, so things like that. But in the green scenario, the price already bottomed in wave 4 here in May. I would find that quite a, I don't know, it's quite a weak wave 4 correction. Yeah, it's quite weak if this was really all of the wave 4. But it's possible. Yeah, in this case, then we have a wave 1 to the upside and a wave 2 to the downside, and then here a 1-2-1-2 setup, and we would now need to see a breakout above the June high, and then we can go higher like that. And that's the ultimate breakout pattern. We did say that this scenario is valid as long as we're holding above, well, the last swing low here from July, but really, ideally, the price was supposed to hold the $3,312 level to keep this scenario alive. And guess what? The price held above it, so it did not really want to commit to a different scenario. So price, we could not rule out green, let's say it like that. So it kept that scenario alive to keep us in the dark, because from this area also a broader wave 2 was possible. So 2 scenarios could use that support zone, and now we're moving higher. Yeah. And the thing is, now we are coming to a point where that white wave 2 could form a top. So I need to see a break now below the July low. First of all, I would say below 3,350, that swing low from Friday, to confirm that it's not green. Because honestly, the green scenario below that last swing low will become far less likely. And that will tell you now all about the invalidation points and levels where green will become more and less likely. For now, I don't prefer white, I don't prefer green. I'd rather start to like orange. Orange is the triangle, which is new, because a wave 4 is characterized by a lot of fake outs, choppy price action, and all of that we have in this range. So the idea that I mentioned that already in April that we were in a correction so far has been holding up. Just the microstructures are messy. Very typical for a triangle, but I normally don't like to talk about triangles until we have further evidence. But because we are printing kind of lower highs and higher lows, that becomes an option. So in a triangle, this initial move down was an A wave. This is a B wave. This is a C wave. This is a D wave. And the D wave needs to also stay below the green line, below 3,475 to remain valid. And if we now see a decline from here, but it's corrective again, not impulsive, then that's likely our E wave in the triangle. So ultimately, it's not an easy range to navigate, right? People like the answer, but the answer is we're in a correction, and we've been in that correction for quite some time, and that's been the thesis, and that's playing out right now. The question is just what is the exact microstructure, which is tricky to determine naturally in a range. In a range, normally the focus is on capital preservation, and we're basically waiting for the next upside breakout. And we could be nearly there. I mean, again, a breakout signal would be a move above 3,475. Until then, I'm watching for another pullback, at least in the E wave of the wave 4. But then again, also here, the triangle, as it is, will become invalidated with a break below the June low. So if we get a break below the June low, it's likely not the triangle, but the white count will become more likely. Because, as I said, in the triangle, this is about higher lows and lower highs. So the wave 4 in orange, or the E wave in orange, should ideally stay above the red line. So it means what we're watching for here is how the price now reacts to these key levels. They're all on the chart: Fibonacci support, Fibonacci resistance, and then these boundary lines of the range. And the breakout of the range will indicate, should give us a clear indication about what the price wants to do over the coming weeks. Yeah, so we're getting close to the end of this correction, I believe. It's already been unfolding for quite some time. Gold corrections can take a long time. Soon we should see upside movement continue, but possibly not until the wave 4 is complete. I mean, even in the white count, we could go a little lower, but I have no indication at the moment that downside momentum has started. That's the update on gold. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, if you are following us in our stocks membership, or if you're interested, we cover gold there as well on a daily basis, silver as well, in case you want more gold and silver updates, because it just can't update gold daily here on YouTube because we have too many other assets to cover people are interested in. But if you want daily updates, they are kind of included as a bonus in our stocks membership. By the way, also in our crypto membership. So it doesn't really matter which one you go for if you're interested. Thanks so much. Bye-bye.